What's up guys, welcome back to my channel. So today I would like to talk about AT&T stock as one of you guys requested. So I have been starting investing in AT&T since the coronavirus, like April this year, and currently I have 90 shares and I plan to invest continuously, like maybe $100 per week, continuously grow in my position. Because I think in the current uncertainty, AT&T would be a good choice because it's stable and it brings huge dividend. So in the following, I'm talking about some bulls ideas and bears idea about the stock. If you guys are interested in T stock, please keep watching. So AT&T was existed for more than 140 years ago, and it started with the Bell's telegraph. And AT&T stands for American Telephone and Telegraph. So from the name, we know that this company has been focusing on telecommunication for the past more than 100 years. Interestingly, one of its competitor, Verizon, is also come from the original Bell telephone company. Along the history, at one point, the company is too big, so it's against the antitrust law, and it has been divided into several different small companies by the government. And later on, those small companies, like 7 of them have formed AT&T and 2 of them has formed Verizon. So because of the technology development in the telecommunication industry, it brings huge convenience to people, like in ancient times when people can just write a letter to each other. Nowadays, because of the 3G, 4G, 5G, people can make a phone call or have a video conference. And since the telecommunication plays an important role in people's life, it feels like the utility that people will always pay for. So that becomes the first bull opinion about AT&T is it has the largest user base in US, and also it generated huge revenue per year. Like in 2019, its revenue is $118 billion. That is more than some of the fast-growing tech companies. And if we break down the revenue source of AT&T, we can see that more than 78% is telecommunication, which including like individual mobility, business wireless, and also entertainment. And these type of costs, as people use as utility, it will probably not have a significant decrease during the next 5 years. And since this revenue source accounts for 78% of the whole AT&T revenue, so that makes the company's revenue source or its cash flow much stable. The next largest revenue source of AT&T is Warner Media, which surprisingly doesn't count a lot for its total media, only 17%. Because previously when AT&T acquired Time Warner, they spent $85 billion, and because of that, they have acquired more long-term debt. So a lot of people say that AT&T's acquisition of Time Warner is that they don't focus on the main business, but they want to also do the streaming media and compete with Netflix and Disney Plus. While AT&T claimed that they think this acquisition will actually help their business and create a synergy effect, because AT&T is a dispenser of media, and after they acquired the media company about the media production, it can help them to broaden their ecosystem. And also it's probably because in the telecommunication area, when there's several dominant players like AT&T, Verizon, T-Mobile, and Sprint. This year in April, T-Mobile and Sprint has merged together. And for this industry with a long history, there's not much growth potential comparing with other tech companies. So that's why AT&T want to make their business has more variety. The second bull opinion is that AT&T currently have around 7% dividend yield, which is much higher than its competitor Verizon, which has around 4% dividend yield. And for me, I invest in AT&T also is for its dividend, since I know that the current stock price at around $29 is probably at a cheaper point with a PE ratio of 18. And the current stock price, $29, is pretty close to 52 weeks low, $26. So I think that's a good timing to buy for dividend investment. And the third bull opinion is that AT&T will benefit from 5G technology. Because comparing with 4G technology, 5G technology is revolutionary. It can help a lot of like self-driving car or Internet of Things to operate smart home appliance with your phone. The increasing of video type of media, 5G technology will also help customers to consume this rich media. However, there's also some bear opinion about AT&T. The first one is its debt is pretty high. So for this Q1, total asset is 545 billion, while the total liability is 349 billion. So the liability is more than its current equity, and that shows potential risk to the company. But given that the company is a cash cow, since their customers will pay for the phone services regularly, so the company would not be very concerned about the liquidity issue. And also because in 2017 they have had the acquisition of Time Warner, so that's also a fact why they have a huge amount of long-term debt. So when comparing the long-term debt of 2018 to 2019, it has dropped from 176 billion. In 2019, it dropped to 160 billion. So the management has also trying to work on to repay the debt from time to time. So for that reason, I understand there's more potential risk of their huge debt, but as long as the debt is going down year by year, I wouldn't be concerned that too much. So the second bear opinion is that for their business of Time Warner, which contains Turner, their cable TV, and also HBO and Warner Brothers. So for cable TV, since there's more the trend of streaming media like Netflix and Disney Plus, so we can foresee the trend of their revenue from this Turner going down. While for the other source like HBO and Warner Brothers, although they have the ability to produce great movies and TV shows like Game of Thrones and Harry Potter films, but in the fierce competition of streaming media, who will become the winner seems unpredictable. So I think that's also one of the risks since AT&T has spent so much money in Time Warner business. Whether they can get the return on investment from this, it's still a question mark. So to sum up, I think AT&T is still a good investment for me after looking at the potential risk from the company's debt as well as the competition for its Time Warner business. But I think the company has a very solid revenue generator, which is their main communication business. So I would not worry about that so much, even though in the telecommunication industry it's already saturated. But I would not foresee a significant decrease in the future. So I think putting money in this stock would be safe at this point. So thank you guys for watching. Hope you guys find it helpful or interesting, and I will see you in my next one. Bye!